time now for the nationally syndicated radio show, The World of Laurie Zoock. And now, here she is, the smart, the sexy, the savvy, divine Miss C. Oh, good day to you. As you can tell, this is not Laurie Zoock. This is Jeff Collins. And we have switched chairs today. Not quite literally, but almost. Today, Laurie is in the hot seat, and we're going to talk to her about credit counseling. And if you didn't know this, and probably you new listeners out there, Laurie's an expert when it comes to evaluating consumer credit. Now, if you are a person who happens to be having a credit problem, I highly suggest that you give her a call and find out what you can do to repair your credit. Credit is a very valuable thing in America. In fact, without good credit, pretty much you can't do anything. And I know a lot of people say, oh, I just deal in cash. Well, cash is always the king, but without credit, you can't rent a car, you can't rent a hotel room, you pretty much can't go anywhere. They always ask for a credit card, not a debit card, but a credit card. So it's really important that you have some sort of credit to make sure you establish yourself in our society. And good morning to you, good day to you, Miss Z.
Good morning, Jeff. How are you?
Good. A little raspy this morning. I'm sorry for that.
No, that's all right.
Tell me something. How did you become a credit counselor? What prompted you to make that choice in life?
Well, actually, it's a credit consultant. A credit counselor is actually someone who helps someone manage their money. Oh. I know, even though it sounds like it's what I do, I'm a credit consultant. And how I became one was rather accidental. Moved from New Jersey to Florida back near the end of 2005. And originally got licensed as a realtor, but never actually worked as one. I had been assigned on a RE/MAX team, and the person that was trying to help clients with bad credit ended up leaving, so I kind of jumped into that chair, so to speak. And in a very short amount of time, I had to figure out how to read credit reports, why companies don't respond back to letters or do the right thing. And it was actually pretty difficult. I actually remember crying in the beginning going, I can't do this. That's how difficult it was to try to figure it out.
Why are they so complicated?
Well, that's a very good question because, well, let me put it this way. The consumer reports you get from annualcreditreport.com, which you can get once a year, are not made to be consumer friendly. The less you know as a consumer about how it works, the better advantage that the companies, the credit bureaus, the collection agencies have against you, because if you don't know what's wrong or how it works, then your scores are not going to be as high as they should be, and therefore your FICO scores will be lower and your interest rates will be higher. And that's kind of a scary thought, but that's actually what I figured out in the beginning. So lenders' reports are typically easier to read and provide more information, but the reports that you get as a consumer tend not to be as friendly and tend not to have as much information on them.
So you're the person that will help decipher those for the people that might need help.
That's what I do as a consultant, exactly, is I can explain exactly what's on the report, what it means to them, put all the pieces of the puzzle together so it makes sense, because it's actually complicated unless you know how it works. And then depending upon the process, for example, I offer them a do-it-yourself option. Maybe people don't have a lot of money and they want to do it themselves. Or I do a second step typically where I assist them for 90 days by providing the information and kind of coaching them or guiding them through the actual process to try and resolve as many issues as possible. Is every issue going to be resolved? No, it's not. People sometimes think that everything can be fixed and that in a matter of days they're going to have 800 credit scores, and it just does not work that way.
Why repair your credit?
Well, let me actually use that word. Credit repair is not what I do. And let me explain what the difference is. A credit repair company falls under what's called the Credit Repair Organizations Act, or CROA for short, which is a federal law. A credit repair company is not allowed to charge any money up front, yet 95% of them do. And actually that same statistic, 95%, is the amount of companies that act fraudulently as per the Federal Trade Commission, but they don't have enough people to go after these companies and track them down.
How do you know if one's a fraud and one's not?
Well, what you do with any other company is you can Google that company's name with the word fraud or scam next to it and see what their ratings are, because usually they've been rated. They might be rated on Ripoff Report, they might be rated on Yelp or Manta, but typically when you type the name of that company and you can put fraud, complaint, or something like that, that will pop up with one of those sites, and you can check companies out that way and see. But a credit repair company, here's how it typically works. If you were the client, you would sign up with a credit repair service. Most of them charge about $100 a month, and they charge you monthly for 1 to 2 years on average. So that's $1,200 to $2,400. What most of these companies do is they send out 3 letters, one to each of the big 3 credit bureaus, which are TransUnion, Equifax, and Experian. And they're sending out these letters on your behalf. A lot of times, you don't even know what's in that letter that's being sent out on your behalf, which is kind of scary in itself. And then when that letter gets to the credit bureau, they're not actually, what they do is they contact the creditor or the collection agency that you are disputing, whatever your dispute is. But they do it via a system called eOscar, where they send a 2-digit code to these companies. And the company, they're not pulling paperwork. Most of them don't. They just look in the computer. So, of course, if it's in the computer, that's what they report back to the credit bureau, which then comes back to you, and it's usually the same thing. A small percentage of the time, you might see a change, but most of the time you don't. So these credit repair companies don't tell you is after 2 disputes, the 3rd time it'll come back marked frivolous and irrelevant, and they will not investigate that complaint again. Now, if you have documented proof and you include that to the credit bureau or the company, you definitely have a much better chance, but credit repair companies, most of them don't do that. They're in business because they want you as a consumer to believe everything that's not believable. You know, if it's too good to be true, it probably is. So if you fall for these ads that say, we're going to get you 800 credit scores in a matter of days, the only way that you could do that will be illegal. And there are companies that do that. What they do is they use either a social security number from someone who is deceased or a number that hasn't been used yet, and they make a second separate file on you, which is illegal, and it's a felony, and you could go to jail for it. But they're not going to tell you that. So you
would still go to jail even though you were not aware of it?
Even though you're not aware of it, right? Even though you're not aware of it. It is a criminal offense. So
how do these guys portray themselves?
That they are saving you by making up this new file of all good credit. The credit bureaus can figure it out. Eventually, they're going to put together, especially if you're at the same address, there are certain characters in their system that will say, it's questionable. So you have to be aware of what companies do. When a company says it's going to remove government items such as child support, tax liens, bankruptcies, judgments,
I hear them all the time on the radio.
It's a scam. They can't remove it. If they are legitimate items that you actually owe, in the case of government items, you have to satisfy those debts. Some of those companies may be willing to negotiate. It's not going to disappear off your report. I hate to tell you. There's a federal law called the Fair Credit Reporting Act, or the FCRA for short, that basically says these companies are allowed to report information about you as long as it's accurate. The key thing is most people don't necessarily know what's on the report. Is it accurate or not? Because they don't know the other criteria for it appearing on the report, such as the date that it initially went delinquent, the date you opened it, if a collector re-aged a debt later down the road. There are a lot of issues there, and regular consumers, you could spend a big amount of time trying to figure out what these different things are. So basically what I do is, it's like music to me. I decipher that music, that code, into something that I can explain back to you in English.
Well, often, it hasn't happened to me lately, but years ago I used to get plenty of mail from different companies saying, we could repair your credit. We know how to make it right. We can make this go away. And I wondered, how did they even know? Answer that.
Oh, okay. How did they know? Because they probably purchased lists off of one of the big credit bureaus of people that have subpar or poor credit. And then at that time, they did mailing as opposed to nowadays where they can email you and buy lists that way or call you off of those lists. So that's how they would know. Or the other way they could probably tell is through public records. Did you have a bankruptcy? Something in public records that would bring your scores down. And then they would hit you up and say, I love the word, we can repair or we can fix. You can't, there's no magic pill to make things disappear, and that's what people don't understand. Now, alternatively, if you are legitimately a victim of identity theft, for example, yes, then most likely there's a simple resolve to it. But typically, if you have bad credit, what I do is I teach people how to resolve issues with the least amount of damage or sometimes no damage, and actually sometimes it can help them increase their scores. And so what I do is I put them on the right path quickly to get them back to having good credit. Most of my clients come to me because they want to purchase a house. So in order to qualify for a mortgage, you need relatively decent credit.
749 is the minimum pretty much for getting a house right now.
Well, actually, no. I work with mortgage people where they can do it at 6 or 620 or 640. And I have clients that will want to get to that point. But what I explain to the client, the reason I teach it and I don't do it for them is I want them to have a skill so they understand how it works. If I were to do it for you and you got into that house and you made a late mortgage payment, it's a 1 to 200 point hit. FICO doesn't reveal points except on that. Right. So what happened would be you get into a house and then you didn't learn anything and now you have the same bad habits. So credit affects your scores in a multitude of ways because your scores count for things like homeowners insurance or car insurance or certain jobs like working for banks or if you work in a classified government position,
you can't even get jobs in some places without a good credit score.
Exactly. And I have a friend going through that right now. So certain companies are going to look to see because these companies want to see how risky are you. If you have bad credit, it basically says, well, I don't pay my bills, I don't care about anything, and so why should a lender lend you any money or give you a credit card if you have poor scores? They just don't want to do it, and that's what people don't understand.
And we'll be talking more about that in just a moment. You're tuned to the world of Laurie Zoock.
From back, neck, or body pain? Do you suffer from migraines or have jaw or face pain? Has conventional medicine failed you? Were you injured or in an accident? Call chiropractic physician Dr. Dan Maddock at 813-935-1664. Dr. Dan has helped thousands of patients gain relief for more than 30 years. Dr. Dan is caring, gentle, and takes his time with each patient. He's also a past president of the International Craniopathic Society, a special certification of only 300 chiropractors worldwide. Dr. Dan helps patients from the neck up and the neck down. Dr. Dan accepts most insurance plans. Don't continue to live in pain. Call 813-935-1664 today. That's 813-935-1664 and get on track to better health.
Central Payment, your #1 credit card merchant service provider in the industry. Providing e-commerce solutions, POS systems, standalone terminals, mobile apps, and much more. Call Central Payments James Carner at 813-777-4332. Looking for the lowest rates in the industry and #1 customer service? Call Central Payments James Carner at 813-777-4332. That's James Carner, 813-777-4332.
Do you miss that old school sound that made radio great? Let me invite you to preview Philharmonic's Jack of All Trades at PhilharmonicBlues.com, a collection of Americana blues available as a download for $7.99. You can sample each track on the album page and try before you buy. Philharmonic, Jack of All Trades at PhilharmonicBlues.com. That's PhilharmonicBlues.com. evening, right on through the morning dew. You know you broke my...
Welcome back to the world of Laurie Zoock. Today we're talking about credit, you and your credit, and how to repair your credit, and how to live a better lifestyle. I said this earlier. If you do not have good credit or any type of credit, you are going to be in trouble in this land. In America, nothing happens without a credit score. And I know that Laurie will attest to this, that if you don't have good credit, there are places where you cannot get jobs. There are places that you cannot rent. You can't, in a lot of hotels, they will not take your cash. They want your credit card. You can't rent a car. You pretty much have to have a credit card. And a lot of people go, I can't. My credit is too bad. And that's where Laurie comes in.
Right, and what I try to do is help them develop positive credit in a realistic time frame, and that's the key word, realistic. And I pretty much tell people, I am a reality check. I'm not going to tell you what you want to hear, which is pretty much what everybody else is going to tell you, because they want to bill you $100 a month, year after year, and you as the consumer aren't understanding what's happening. If you're a consumer with bad credit, you should want to understand how consumer credit works so that you can develop scores that are over 800. And therefore, when you have credit cards, you learn to use them wisely. Because if you don't understand how interest rates work, boy, are you going to pay a lot of money when you go shopping and you don't pay off on the interest. So imagine, not just from a credit card, but from purchasing a house perspective.
Absolutely.
If you buy a house for $200,000, if your credit's good, over 30 years, you might pay $400,000 for that $200,000 purpose. But imagine if you have bad credit, you could pay $600,000 for that $200,000 house.
And that plays very heavy on your loan as well. If you think you're seeing right now rates at their historic lows of it's 2.97, something like that.
Around 3 or 3.5 now, but yeah, that's still pretty low.
Still very low. Mm-hmm. But if you have bad credit, you can see though that. APR is, well, it'll probably be an APR. It won't be fixed if you have bad credit. It usually is not fixed, and it could be 5, 6, 7%.
It could. It depends upon the type of loan that you qualify. And since I'm not a mortgage person would best assist a client as far as their situation and what type of mortgage. Some mortgages, like the balloons, can be dangerous. Look what happened when the market blew up a few years ago, and people couldn't pay that amount when it increased dramatically.
Same thing with cars.
Right. I mean, I prefer everything to be a fixed rate. I like knowing my monthly budget.
It's always going to be that.
Right. It's always going to be the same. One of the things, too, with clients is once you can qualify for a home, I want them to understand how it works. So, one, they never have to go through it again. But two, should they have to, they know what they can do. Ultimately, if they stay on track, I'll give you an example. A few weeks ago, I got a phone call from a client I had 2.5 years ago. And I remembered his name because I remember he and his wife worked very hard on their credit. And ultimately, they qualified for a house back then. And so out of the blue, he calls me up and says, I have to thank you so much. And I get chills just thinking this. He goes, my scores are now in the high 7s, and we're going to refinance the house, which is going to save them several $100s a month and over 30 years. That's a small fortune, and they could use that money for other things. When you have subpar credit and you pay high interest rates, those are the people that don't know how to budget, don't know how to manage credit, end up in financial trouble. And, I'll see clients who maybe have had multiple bankruptcies because they didn't learn. No one ever actually taught them. And I'm not, a financial wizard. I just grew up with parents who were very strict on how to manage credit and money. So I was able to take that along with learning the consumer advocacy end of it and being able to help people, guide them to what agencies may be able to assist them, for example, if they have a problem. But I teach clients everything from how to read the credit report, they can see when I line things up on a spreadsheet, does the story line up, so to speak? If they owe debts, are they valid for the state that they're in, that statute of limitations? It's different. For example, in Florida, it's 5 years. Most items that are negative can stay on your report for 7 years. Government items and bankruptcies can be longer, 10 years in some cases, sometimes longer if they're renewed. So when you ignore the letters that come in to pay your bills and you ignore those collection letters, it's not getting better just because you don't look at it. It would be like, if my car was making terrible noises, I would take it to the mechanic to get it fixed.
You would think so.
But there are some people, they'll just turn up the radio and go, whatever.
Noise is gone.
Yeah, you're right. Noise is gone. And then the car blows up,
Right.
in the middle of the night when they're on the highway because they weren't proactive and they didn't address what the situation was. And so what happens is it becomes worse and worse.
Now, what do you do when people come to see you? And the question I'll follow up after this one is, when should they be coming to see you? But when they do, and they put themselves really in a boogie hole where some of the debts are now over the 5-year limitation, some of them approaching 7 or 8 years.
Right.
Not from my experience, but from what I listen to and hear, the best thing to do is not pay that debt, because you are going to lower your credit score. If you take an old debt and say, I'm going to pay off this one now, I think you should consult with you first before.
Right, and that's why I get a lot of referrals that way, because what you don't know as a consumer is that in credit world, which is often backwards, if you pay off an old debt, it doesn't raise your score, even though you zero out the dollar amount.
It actually lowers your score.
It drops substantially.
Yes.
It's a huge hit.
Yeah.
And people say, why? I can't answer that. FICO, Fair Isaac Company, developed this model. Now, supposedly in the next year or so, I've been reading articles saying, hey, it's not going to drop your score. However, if I could teach you how to maybe negotiate that debt off your report, then your scores are going to go up. Now, if it's within the statute of limitations, typically, and it's a valid debt, let's assume it's valid, that's a good option, learning how to negotiate it off of your report, which can happen a lot of times, no guarantee. If, however, using Florida as an example, it's past 5 years, that means the company can no longer sue you for it. They can't legally sue you for it. It doesn't mean they can't call you up or send you letters unless you send them a cease and desist letter. And if you're close to 7 years, and if that particular type of debt, let's say credit card debt, it's supposed to fall off, chances are you don't want to touch it. Okay, where's the exception? Well, client wants to get into a house in a few months, and the debt is not coming off maybe until December, several months down the road. Then chances are I'm going to have to work with them to teach them how to negotiate that. Where it becomes very, very tricky is if you have an old debt, the way the statute of limitations is designed for both credit reporting and for collections is from the date you first defaulted on that debt.
Right.
So if you had a credit card and you defaulted, say, back in January of 2012, for example, then that's the date the statute is designed from. If, however, you make a subsequent payment later down the road, so let's say
It starts over
again.
again.
If you made it in 2013, you've now just restarted the statute of limitations, and you've actually made your situation worse.
Right.
So that's one of the purposes, obviously, of doing the show, is for people to listen and understand what makes common sense to you as a consumer is not how it works.
Not even close.
Right. So, mortgage people that I work with typically tell clients to call me, because when they say they want to pay off their debts, they're like, oh, no, you better not do that. You better call Laurie, because you're going to hurt yourself. So if a client comes to me and they've already paid off all of their collections, they've in essence shot themselves in the foot. They could drop their scores easy 100 points or more, depending upon how many debts there were.
How
and
long
you
does
can't
it take?
recover from that.
How long does it take to build those things back up, that
Oh
100
my
points?
gosh. Well, I mean, there are some tips that can help you. Depends on how low their score is. It can be a year to 2 years.
Wow.
Okay?
So by doing something you think is morally right, by correcting and paying off an
Yes.
old debt, you've really shot yourself in the foot.
Exactly. So what I do, because I know the ins and outs, is I teach clients in essence to be like me. So I've done
Be like
professional.
Laurie.
Yeah, be like me. I've done professional debt negotiation. I don't find it that difficult because it's not my debt. I would do it on behalf of a client who would pay me. The reason that I really don't do it anymore is because, first off, I need a power of attorney from the client. So that means typically they have to go to an attorney, which costs them money, get the document. Well, if either they fax it or I fax it to the company will say, at least I guarantee you 2 to 3 times, we didn't get it. Especially when it's a large company.
Right.
You don't know what fax it went to, and it becomes increasingly difficult. I find it better to teach clients how to do it so they have some control. So when I teach a client, they learn some of the industry secrets that I know, some of the jargon, the trade language, so that when they actually speak to a debt collector, they don't sound like the 99.9% of people out there who don't know what's going on. So I've had clients where I've taught them this, and they'll call the company and they'll call me back and said, "Oh my God, the person hung up." Well, yeah, because you shocked them by what you knew. And then typically that person will call back and they realize, so they have to sound like they know what they're talking about, because if they don't, it's not going to work.
Another misnomer is going to these free credit score sites. Now, folks, if you go to those, even when you hit those sites, there's a good chance, if not for sure, you're lowering your score every time you hit those sites.
Well, hang on for a second. That's not necessarily true. If a consumer pulls their own credit, no points off the score. If they go to a lender and give their social security number,
then it hits it.
That's when it hits it. And again, FICO does not reveal the points. I can tell you in my experience, it's 2 to 5 points per hit. So you'll hear stories where, I've had mortgage people who will say, well, wait a minute. If they go to a mortgage broker, who's brokering for several companies.
Could hit it 3, 4, 5 times.
Or I've seen 10. So if that's 2 to 5 points per hit, you're looking at up to 50 points from just that one run.
And that can put you in a bad situation as far as the rate you thought you were going to get is not going to be that rate.
Right. Now, if you're working with a loan originator at a particular company, and that person you've given them permission to pull your credit once, typically, I'm going to say most of those companies, if you pull it again in, I think it's 27 days, most of them anyway, they pull it again, it's not another hit. The software will recognize it as just one. But it's the same thing when you go shopping for a car. So if you go to, you're at a dealership and the finance person pulls credit, when I go in to buy a car, I know what my consumer FICO scores are. So I know I'm over 800. So I walk in and say, hey, I know what my scores are. I only want you to pull my credit once. It's called permissible purpose. You can't pull it multiple times, and I will base the rate upon that. But most people with bad credit, what they do is they get panicky, and that's where they look risky. So now they've had their credit pulled, 5 or 10 times, and then they drop their score. And so the next time they want to go for a credit card or for a house loan, those companies are looking at all the hard inquiries. And you, as the consumer, look desperate because you've had your credit pulled so many times. You're not a good credit risk. So an interesting side thought on that is, the credit bureaus, in essence, can profile you, and so can credit card companies, based upon what you're using. So, for example, if you never use your credit cards for food shopping, and then one day you go out and do it, it can sort of put like a little red flag on the
why
file.
Why are you using this now?
Right, because maybe Jeff is desperate and he has to use his credit card for food. So they kind of keep an eye on that. So you have to be careful in talking to your credit card company. For any reason that you speak with them and they start asking you, well, how's business, especially if you're a business owner. Mm-hmm. If you say anything negative, it's kind of slow right now. Well, how much is your business bringing in?
And they do it very softly so you don't really catch on.
It's very subtle, right? And what they can do is they can cancel your credit lines. They can drop your credit limit. So be very, very cautious with what you say, only saying negative things.
It's also important that if you happen to have a credit card or 2 or 3 or 4, keep them active. Use them every couple of months for even small transactions.
That's correct.
You don't have to buy a house every other day. You just go to the store, buy a couple of things, and then pay it off.
Right.
Just pay it off.
Exactly.
It's not the term that you have the money in. Like, you don't have to wait the 30 days in order to benefit from it. You can pay it off in a week or 2, and it still shows up you paid the debt.
Right. Well, I live backwards for most people. When I was younger, when I was young and stupid in my 20s, I never got really into trouble using my credit cards, but there were times I owed $2,000 or $3,000, and I really didn't understand the interest. Now you can go to a website like Bankrate. You can go to bankrate.com. And there are different calculators that you can calculate out based on your interest rate what you're losing in essence by using the credit card. I use credit cards backwards. If I use it today, I'll go home and I'll make a payment. And that I never owe any interest. If I'm going to go away somewhere, I'm going on vacation hypothetically next month, and I know the trip's going to cost me $1,000, then I actually make that $1,000 payment before using the card.
At what time do they actually tack on the interest?
Well, on revolving credit, it's every month at whatever the interest rate is.
So if you pay if you borrow $100, let's say you go out and buy something for $100, within that 30 days, if you pay it off?
If you pay it off, there's no interest. But after that, that's when it starts.
That cycle, after you go through the
right,
cycle.
After you go through that cycle. What I use credit cards for is merchant protection. So if I'm making a purchase and I want merchant protection as opposed to paying cash or a check, then I use the credit card and I just make that payment ASAP, and I never owe any money. As a matter of fact,
my wife hates that. When she's, why didn't you just pay it with cash or the debit? I go, no, you understand. I'm building credit,
right,
and I'm going to pay it off now.
Exactly.
She goes, really? Does it work like? I said, this is America. Yeah.
Right. Well, my scores are over 800, and I've been doing it this way for a very, very long time. People use their debit cards, and honestly, I don't use debit cards. Why don't you want to guess why I don't use debit cards?
Why don't you use debit cards?
Okay. I don't use debit cards because I think it's dangerous to use them. And
they are dangerous.
Especially if you're giving your debit account information to a company. A lot of people belong to gyms where they go every month and they give the debit card. Well, you can walk in and say, hey, I'm not coming back anymore. You've got nothing in writing. What do you think that gym does? They keep billing
you. They keep hitting your card.
And most people don't even look at their statements. They don't look at their credit card statements, and they have no clue, and they lose all this money. But for security reasons, debit is very dangerous. Yep. If somebody makes a mistake and takes it out of your cash account, and let's say it's a double hit. I've had people who used it for mortgages. It's a double hit. So you had a $1,500 a month mortgage payment, and they accidentally typed in twice $3,000
into $3,000.
All your other stuff is going to bounce. Right. But if you used your credit card, when you look at that statement that you should be reviewing, you can see that, and that's credit. It's not taking it out from your cash. So I find debit cards to be more dangerous.
And you can dispute the credit card. If there's a charge on there that doesn't belong there, like you say, the gym hit you twice, you can say, no, I already canceled with them. I'm disputing this.
Right.
You have an option. With a debit card, there is no protection.
Right. And for most credit cards, you usually have a period of 60 to 90 days where you have to be able to report that there was an issue. They only go back a certain amount of time. So if a year has gone by and you've been getting billed, they may only credit you.
No problem.
Yeah, they're going to say, you didn't look, it's your responsibility. So you have to be responsible to follow up on all your financial stuff.
What is the Consumer Financial Protection Bureau, and how can they help consumers like me, you, and everyone else?
Good question. It's a government agency. It's been around for a few years. If you go to their website, you can file complaints in different categories. It might be mortgage, it might be credit cards, it might be student loans, it might be debt collectors. And so you can file a complaint online with this government agency. You can also upload documents. So if you've already sent a letter to the company and they haven't responded or they're not assisting you, then you file a complaint online, you upload that document. The Consumer Financial Protection Bureau will attempt to get a hold of that company via their email system and show them that complaint. I'm going to say usually it takes, about 3 weeks for you to get a response back. So that response back could be, we can't get a hold of that company. That could happen. But most of the time, they're able to get you the information. It basically forces that company to come back with a response.
Right, to respond to you.
Right. And so the Consumer Financial Protection Bureau keeps a record of how many complaints against each company. So it kind of tells them, oh, this company, they're not really doing what they're supposed to, because there are regulatory agencies also that monitor. And so it can be an advantage, though, for the consumer to use them.
How for people that have no credit, and there are many around here, how do you advise them to establish credit?
Very good question. In credit world, we call that a thin file, meaning they have nothing or very little. So simple ways would be go to a bank or credit union and take out a secured card, meaning it's secured by your own money. So yes, you need to have money in the bank in
Put
order
200
to.
in. It's your 200. It's really your 200.
It's really your own 200 under MasterCard or Visa. And the reason I suggest using a bank or credit union that you can go to rather than online is that online there are companies that do it, but they'll charge you $150 because you have bad credit just for opening an account.
And you see them on TV too. If you watch
scam.
all the time, you see them a pretty colored card and it has a MasterCard or a Visa on it. And call now, and you'll have a line of credit in 24 hours. Read the fine print.
Exactly.
At the rate, it's going to be outrageous. And the ones who are really bad with this are the tribes. I get them all the time. The tribes send you $1,000 in your bank in 24 hours. Yeah, at 50% interest.
Oh, sure. There are places I've seen. I think it was First Orchard had 75 or 78%.
You'll never pay it
That
off.
exceeds the usury law. Right. That's loan sharking to me.
Exactly.
But if you go to your own reputable bank in town, what you want are 2 cards in equal dollar increments, 2 $200 cards, 2 $500 cards, whatever you can afford. The higher the amount, better, but make them in equal increments. They should report to all 3 credit bureaus. That will be helpful in the
How
event
long
you
does it
offer
take
mortgage.
for them to report?
Usually 30 to 60 days, because once you start using them, you're dealing with the bank and then the update to the credit bureau. That what you want to do is season those credit lines, which means the longer that you've had them.
Seasoned is the key.
Is the key word, right? Yeah. The longer you've had them, the higher your scores will go up. But the key is you really don't want to owe any money because you don't want to pay any interest. So what you do is you use them once a month, a tank of gas. Don't wait for the 30-day bill to come in.
Pay it.
Replenish the money right away and do that once a month on those 2 cards. And that'll start driving up those scores. And that's the easiest way. There is one other way to do it, but there is some risk involved. And that's either authorized or joint cardholder status.
I was just going to ask you about that.
Yeah. So if you have a family member, I know people have done it with friends, but it's risky either way. So, for example, if your wife, if you have credit cards and your bank allows it, you could put her on as an authorized user, which means...
I'd get her own.
Okay, yeah. But I'm going to use you as an example. So if you called your bank and said, "Hey, I want to put her on as an authorized user," they should not ask for the Social Security number. Okay, authorized user.
And if they do,
that's a joint card holder. I'll talk about that in a minute. Authorized means she's authorized to use the account, but she has no liability whatsoever.
I made that mistake once in my life.
So your ex-wife could go out. She went out and
she
spent
did
all
everything.
the money. Right, spent all the money, and now you
I'm
are
responsible.
liable. Right. That's the bad part. So you have to be, if you're in a marriage, if you don't know it's going so good, it's kind of risky. But if
take advice from somebody, especially me. If you get married and you love your wife or your husband, either or, whoever's listening, the best thing to do is not combine your bank accounts with that person at any time, and you make sure each of you have your own credit cards, your own debit cards, your own bank accounts. By putting them together, that is a recipe for disaster. And I've had a lot of people say, that means you don't trust them. No, that means I trust them a lot, and I want to keep the relationship solid on the ground, because this is my money, that is your money.
Right.
You work, I work. Why do I want to put this all together?
Well, if something goes wrong for one of you, the other one would be safe. Right. But in the cases of getting a mortgage, if she were the authorized user, here's where it wouldn't be so bad. You don't have to actually give her the card. But what happens by authorizing her is that positive credit history from that card appears on her report. Hers doesn't report on yours, but your good stuff reports on hers. At any time, you can remove her. But like I said, you don't have to give her the card. Now, on the other hand, the risky one.
The risky part.
If you put her on as a joint holder, on that joint card holder, and they're taking the Social Security number, which, by the way, will be a point hit for her at that point and probably for you as well.
Right.
If she decided to go crazy, you are both liable on that card. So if you jointly default on that for, say, $5,000, that $5,000 shows up on your report, and that $5,000 shows up on her report. So that's much riskier. But people do it. So yes, we say 50% of marriages end in divorce. Yeah. If I talk to someone and they feel, I'm not in such a good relationship with my other half, I go, well, here's the risk. I give you the risk because I'm divorced myself. You don't want to go through that kind of situation.
No, it's very hard to untangle it, and that's the problem.
Right.
If you don't have your affairs in order in the beginning, they're not going to become in order later on. And it's not about trust. It really is about just doing the right thing for your own financial welfare and your own well-being.
Right. The other thing I want to point out too, Jeff, is you really only need 2 to 3 credit cards.
Yep.
That's it. Get 2 or 3, a MasterCard and a couple of Visas.
Yep.
But people go out and get 10 credit cards.
Not
and now
good.
they spend all the money, and now a lender goes, oh, you've got 10 credit cards, and you owe $20,000. Why should we give you a home loan? You're a risk. So I use myself as an example. I have 3 major credit cards. One is probably, I'm going to guess, 6 years old at this point. The other 2 are 17 years old. I have perfect payment history. I never miss a payment.
That's a key thing, too.
Yeah.
When we come back, I'd like to talk about payment history and how to keep things up and on the up and up, and how to make sure your credit score stays where it is or goes higher.
Sounds good.
Back after this on The World of Laurie Zoock.
Do you suffer from back, neck, or body pain? Do you suffer from migraines or have jaw or face pain? Has conventional medicine failed you? Were you injured or in an accident? Call chiropractic physician Dr. Dan Maddock at 813-935-1664. Dr. Dan has helped thousands of patients gain relief for more than 30 years. Dr. Dan is caring, gentle, and takes his time with each patient. He's also a past president of the International Craniopathic Society, a special certification of only 300 chiropractors worldwide. Dr. Dan helps patients from the neck up and the neck down. Dr. Dan accepts most insurance plans. Don't continue to live in pain. Call 813-935-1664 today. That's 813-935-1664 and get on track to better health.
Are you looking for an affordable way to advertise to thousands of consumers nationally? If you own a business and didn't think you could afford radio advertising, you need to call me, Laurie Zoock, host of the nationally syndicated radio show, The World of Laurie Zoock. My show reaches thousands of people on 29 AM and FM stations nationwide, as well as through the internet. Additionally, your commercials will also be heard on all of my podcasts and throughout social media sites. Don't wait another minute. Call me at 813-777-4908. 813-777-4908, and let me bring your message to the nation and to help you gain more exposure.
Do you miss that old school sound that made radio great? Let me invite you to preview Philharmonic's Jack of All Trades at PhilharmonicBlues.com, a collection of Americana blues available as a download for $7.99. You can sample each track on the album page and try before you buy. Philharmonic, Jack of All Trades at PhilharmonicBlues.com. That's PhilharmonicBlues.com.
Early in the evening, right on through the morning dew.
Are you looking for an affordable way to advertise to thousands of consumers nationally? If you own a business and didn't think you could afford radio advertising, you need to call me, Laurie Zoock, host of the nationally syndicated radio show, The World of Laurie Zoock. My show reaches thousands of people on 29 AM and FM stations nationwide, as well as through the internet. Additionally, your commercials will also be heard on all of my podcasts and throughout social media sites. Don't wait another minute. Call me at 813-777-4908. 813-777-4908, and let me bring your message to the nation and to help you gain more exposure.
And welcome back to The World of Laurie Zoock with Laurie Zoock and me, Jeff Collins. And how are you doing today? everything all right?
I'm doing okay today. Yep.
We're talking about credit and your good credit or bad credit, and something that is very important in your world, because if you are an American citizen or you've just become, here's a great point, if you've just become an American citizen or you've just arrived here, this is not going to be like your country. You have to have credit in order to do anything in our country. It's not
Right.
like where you came from, cash was king. Here, credit is really king.
Sure. You got to rent an apartment. They're gonna check to see your credit history. Almost anything you do, what's your credit history? And if you don't have credit history, very, very difficult.
Extremely difficult, if not impossible, to rent an apartment without a credit card.
Right.
They want a way to be able to get their money, and securely. They can't trust you on your word. And in this day and age, who trusts anybody on their word, when it comes to money? So the credit card is what keeps everything in check. Before the break, we were talking about how to secure and get yourself a credit card. And Laurie had a great idea, and this is one I had used as well. Go to the bank, a credit union, which they're always good to use, or your local bank. Take $200 or $500 of your hard-earned money and put it in a secured credit card. Then what you do with that secured credit card is go out, and you don't have to spend all $500 all at once. You can go out for dinner. You can go out, fill up your gas tank. You can put new tires on your car,
Right.
something you might need. But immediately you want to pay that off. And like magic, within a month, I guess, to 30 days to 60 days, you're going to see your numbers pop up.
Right. It'll start taking on more steam as time goes on. Exactly.
And just keep doing that. But after you pay that off, borrow it again.
Right.
And then finally get a second and maybe even a third credit card.
Yeah, a maximum of 3.
Always 3, yes.
Right. One thing I do want to mention are
Sure.
the utilization ratios on credit cards. Okay, so if you have, I'll use, for example, let's say you have 3 credit cards and you've almost maxed out, let's say they each have $1,000 limit and you're close to that limit, your scores are going to go down.
And tell them why that happens.
It's just the way that the FICO scoring model works. It's saying that you are risky because you owe $900 out of $1,000 on 3 different cards.
You're on the red line.
You're on the red line, exactly. Now, if you pay it off, obviously, that's great because you won't owe any interest. However, I do have one little tip that is helpful. If you carry a very small balance of, say, 5% of the limit, or maybe around $50, it actually boosts your FICO scores, and it's because it's showing a very small usage or utilization ratio.
It's showing
of
movement.
Right, exactly. It's showing movement. If you have paid it off, there's no movement.
Right.
So when you go to qualify for a mortgage, if you've paid off all your credit cards, what you should do instead is just have a very small balance until you close, then pay them off. But that actually does boost your FICO scores up a little bit.
Another little hint for people that are getting ready to buy a house. When you go to the closing table or you're just about there and you're ready to do the paperwork, my suggestion to you, and it always worked for me in everything I do when it comes to housing, make 2 payments. Make your first payment, make your second payment. You have the money, or you know you can get it. Get ahead of this debt by 1, and you'll never have that panic of, I owe in
Yes.
30 days.
Exactly. What you want to do in a case like that is make sure there's no prepayment penalty.
Right.
So I'm going to share a quick story
There you
because
go.
you've seen my beautiful Nissan Juke outside
Yes, I have.
that I love so much. Okay, so I'm the crazy credit mom or credit lady. When I bought the car, as opposed to just paying for it outright, I can play with my own credit. So what I did was I took out a very small loan. Of course, I went into the finance guy after I negotiated with the salesperson, and I said,
Oh, I bet you're fun doing that.
yeah, I said you can only pull my credit one time because I'm over 800. And finance out the car that way. And then I said to him, I want to make sure there's no prepayment penalty, because I actually told him how I was going to pay the car off in less than half the time.
They
It was
hate
a
that, too.
5-year loan, and I paid it down in I'm going to say 20 months. I was actually trying to do 24, but I get so anxious I want to pay it off. Okay. So what I did was, I'll give you an example. So on January 1st, I had a coupon book. I used the first coupon. Let's just say it was $200.
Okay.
On January 15th, I would take another $200 from the February coupon and do that. Then on February 1st, I take the March coupon and make that $200. And what I would do is double or triple up payments if I had the money. And so, of course, I'm sure the people at Nissan thought I was crazy. But what I did was I reduced the amount of interest.
Oh, by half.
So I took this 5-year loan, paid it down in 20 months, and Nissan mailed me a check.
Wow.
And the reason I knew how to do this was when I was in my 20s, I did the same thing because I could hear Dad saying, pay off that car faster, pay off that car faster.
It's true.
And so back at that time, I did the same thing with another car, and they sent me a check. So I paid this off so fast that Nissan actually called me up and said, you can go get your title, and we're mailing you back a check.
Wow.
But for me, it was just sort of a test for credit because I won't recommend something to a client unless I know how it works.
Right.
And
that's very
why.
good.
Right.
Now, you had said something that you should check to make sure that you have no prepayment penalty. That's very important because sometimes if you pay more, you'll get penalized for doing so.
Right, exactly right.
So you want that permission. So you need to negotiate. I guess that's a negotiable. No?
They usually have certain programs where they'll say it. Now, in mortgages, yeah, there are programs where there's no prepayment penalty, but people don't think to ask that. So, if there is a prepayment penalty, then that bank just wants that. They want to know at the end you've paid X amount of hundreds of thousands of dollars.
Right.
So they want that money. But if there's no prepayment penalty, then you'll actually save money.
A lot of money. And another good thing to do is make sure that when you, if you want to learn how to pay off a house quicker, and you don't think you can do it, yes, you can, because all you'd have to do is take $100 to $200 every 2 weeks. If you have your prepayment, make sure you don't get a prepayment penalty, and just put that in an envelope and send it to the mortgage company,
right,
along with your regular payment, and you're going to cut off almost half of the interest you were going to pay over a 30-year loan.
Yeah, and you should also, though, as a consumer, keep records of all those payments so
Yes.
that in the event there's a problem, you have proof, and people forget that part. So you have to keep good records also and do your own due diligence. Just like I said, reading your credit card statements, I have seen errors on my credit card. If you don't see them, shame on you.
Can
So
you pay your
gotta
mortgage
know.
with a credit card?
I don't know. I'd have to ask a mortgage person that problem. Nowadays, I figure probably.
That would be a great way to keep a good record. It's there.
Right.
I made
right.
X payments all these years.
Right. Well, let me bring up one other point. It's auto pay versus auto debit. We were talking about debit cards earlier. People set up their bank accounts on that auto debit. That means that you, Jeff, if you sign up with that gym, you are giving that gym
Permission
because you're giving them your actual account numbers.
And the little key PIN number in the back you're giving
ding,
them.
ding, ding. That's like a security alert.
Yeah.
Now other people. What do you think happens in restaurants when they? That's where identity theft
Never
happens.
use a debit card in a restaurant.
Right. But if you're going to make payments to a creditor and you set your accounts up on auto pay, and your bank customer service can help you do that online, what you're doing is you're getting the creditor's bank account number. Your bank, you then tell your bank to pay that company. That company doesn't see your numbers; they see the bank's numbers, and that's a big difference.
That's
as
what
far
I
as
use
security.
for any stuff. Everything is auto pay. I don't use auto debt, and it works. And in this day and age, it's so much easier to do that. Because a lot of people forget to pay their bills, or they're so busy, like yourself.
Right.
And you go, oh, my Lord, I just forgot to make my payment. Go to your bank and say, look, I want to set up all my payments on auto pay.
Exactly.
And just, you make X amount of dollars. You know that you have to pay X amount of dollars. So therefore, it kind of keeps you out of trouble because now you know your bills are paid at the first 15th or 30th of the month.
Right. And if you do it with a credit card every other week, if you owe a balance, you'll never have a 30-day late pay. But again, and that's an easy trick, but again, for the consumer, check your bank account statements. I have seen
Often.
it where there are mistakes made for consumers by the banks, and they don't even realize it. And so something happened and you weren't checking your own account, you are responsible.
It's your
You signed
responsibility.
that contract. Right.
Well, it's
People
been
want to
fun.
say it's not my fault.
It's not my
Yeah,
fault.
It's not my fault.
It's not my fault.
Be responsible.
I've had fun
Me too.
with Laurie. And this is the world according to Laurie.
Oh, yeah. And let me give out my number in case anybody
yes.
would like to
If
get a hold
somebody
of
would
me.
like
Sure.
to reach you.
Sure, they can call me at 813-500-6064 or my website is crediteducationconsultants with an S at the end.com.
And do yourself a favor. Keep your credit good. Check your credit often. And if you have a question, call Laurie. She'll work it through.
Great. Thanks, Jeff.
We'll see you again.
Central Payment, your number one credit card merchant service provider in the industry. Providing e-commerce solutions, POS systems, standalone terminals, mobile apps, and much more. Call Central Payments James Carner at 813-777-4332. Looking for the lowest rates in the industry and number one customer service? Call Central Payments James Carner at 813-777-4332. That's James Carner, 813-777-4332.